Big hello and a very warm welcome to Brand Equity with me, Sonali Krishna. As we close the year and embrace the new year, I'm surrounded by industry captains who have promised to be extremely candid in their evaluation of the year 2024 and give us very objective kind of outlook for the year that we're embracing, 2025. It's been an interesting year. I wouldn't say it's been a bed of roses, but of course I let the industry captains speak for themselves. Thank you so much for joining me, Rana Barua, Vikram Sakuja, Shashi Sena and Anupriya Acharya. I'm going to start with you, Shashi. How would you have kind of looked at 2024? A lot of whispers from, corporate honchos who will not say it on camera because of obvious reasons have said that it's been quite a muted year and that expectation for 2025 is also not very optimistic. Would you be in agreement with that?
I have no compunction saying it on camera. So I think 2024 could be divided into two parts. The first 4-5 months were pretty all right, and the balance 6-7 months has been a mess, for reasons as you say. And I think multiple reasons, but that apart, 2025 will also probably start off on a slow note. Hopefully, post-IPL we'll see what happens, but we always live in hope.
But, just to understand numbers, and correct me if I'm wrong because everybody has a different number, I believe 2023 our growth rate was at about 11.3%. 2024 we are closing at 10.2% and the outlook for 2025 is about 9.5%. Is that accurate?
So, numbers, each one puts out different sets of numbers, each one cuts them differently. But broadly speaking, 2023 was a decent year. This year is a tough year, especially for the traditional media like print and TV particularly. Digital, of course, is doing reasonably well, doing better in the SME space than the space, the large advertisers, the top 300, 400 advertisers. I presume this will continue to 2025 in the first 4-5 months, then we'll see how it goes.
I see. Let me come to you, Vikram, on your analysis of 2024. He's broadly said it was a tough year, but if you can highlight what have been the key challenges this year.
I think print and outdoor and digital are pretty much holding. TV is the one which has been the biggest casualty. From an 8% growth that we'd expected, I'd be surprised if it closes at more than 4%. And that's also going to be on the back of sport. If you net that out, I think we're looking at a pretty flattish year. So TV has been the biggest casualty. To some extent, CTV coming in has been a headwind for TV. The entire digital YouTube piece now followed also by some of the OTTs which are coming in, which is where I'm sure you're going to come to JioStar at some point in time. I think that becomes an interesting discussion. So bottom line, I think the video part is the one which has actually been the biggest casualty. All revival really is really dependent on how FMCG shapes up next year.
But would you say that the second half has been muted and did not perform as per all your expectations?
Completely. It's exactly like Shashi said. It was the first 6 months were actually pretty good. Second, I don't know what's happened in Q3, Q4. It's just, despite the so-called macros being perfect, but somewhere along the line, I don't know, all macros look good, but the micros don't seem to be working well.
Right. From your standpoint, taking it forward, what have been kind of your conversations with clients, not just in India, but even globally? What is the kind of feeling you're getting? Is the India story very different from the global story?
I think this resurgence that we saw after the pandemic, that definitely has started getting tempered both globally as well as India, and hence some of the expectations on the growth are possibly misplaced. The good part about the economy is that it has a huge domestic market and there is a strong domestic demand if you look at a slightly longer term view. That being said, my understanding of the year, of the two parts of the year, let's say, the first part was largely, a run up to the elections.
Yeah.
And so I thought that a lot of companies were doing a bit of wait and watch actually. In the second half, the good news is that at least we have a stable government, elections are behind us, and there was a whole festive period and all of that. Was it as good maybe as some of the other years? Possibly not. But definitely we saw some resurgence in the rural demand as well, which has been muted for a very, very long time. So for example, the two-wheelers and some of these categories did pretty well. But yes, directionally, definitely the numbers seem to be coming down quarter on quarter, both on GDP as well as the advertising spends that we're talking about. If I was to delve into the client conversations that we are having, surely India is like the MNCs have a lot of pressure on them. because India is core to the growth for any of the global MNCs. A lot of our clients and categories are doing well comparatively to many markets. They are showing double-digit growths, but the challenge is that that is not sufficient. So the expectation from the global teams, and this is client after client across many clients, so that's why I'm calling it as a trend. We find that the growth is happening, but it is not up to the expectation of the global honchos or the global heads of these organizations. So, I mean, definitely a lot of clients are under tremendous pressure.
But, Rana, coming to, harsh realities in this country, we've seen our GDP numbers released recently. We've seen inflation quite high, and that's not been addressed as well. Are you seeing, so a little bit about the client kind of appetite to spend? Are they remaining cautious, and are they continuing that cautiousness in 2025? And what about the consumer's willingness to spend?
There's definitely a slowdown. I think, whatever we discuss or debate, and whichever clients you talk, whether it's the industry numbers which both Sashi and Vikram said, there is definitely a slowdown. And what we thought would be a strong year because of a stable government is showing that things have slowed down over the last few months. Two, clients are very cautious. And I'm talking about from across industry associations or advertising club associations or even our own client associations. They've kind of tapered down in terms of both budgets and spends. And what we're also witnessing, and we've been hearing about it, maybe it's going to be talked more often in the near future, is that you are seeing a slowdown for the first time in a rural economy. Now that's strange. That's coming strange from a country which is supposedly so strong in that segment. The other slowdown that we are witnessing is in the middle class segment. Now, what is going on? What kind of observations are happening? What is the conservation? The consumption pattern has changed a lot. If you start looking at certain trends and all, there is a lot of conversations being taken into luxury and high-end conversations. So premiumization. And we are seeing that also because if you work across global clients and all, and you're seeing a bit of a resurgence in North America and the kind of conversations that's happening, we better start kind of coming back into shape properly, because you're going to see a lot of money is going back out of India again and into maybe the other countries again.
So on one hand, you see all these huge IPOs, right, from the Swiggies to the Zomatos and, and so much of hullabaloo around it. And each one is betting on this whole Indians consuming faster and a lot more. But on the other hand, the reality is jobs are getting hard, increments are not happening, and everybody is living in a state of, some kind of insecurity. So while there is a plush picture that we're seeing, on ground there seems to be a different sentiment. Is that palpable for businesses? Because even if you look at the Q3, Q4 results, they've all been pretty muted, and the guidance for 2025 also seems to be quite muted.
So there are two things, if I may go. So to build on what Rana said, one aspect is, see, a lot of consumption is sentiment. So if the sentiment is average, forget the GDP numbers, the sentiment is muted, it will, especially for middle class and poor people, it will show reflect in the demand. The second thing is the inflationary pressures. So a lot of clients' input costs are going up. Therefore, the bottom line is being affected. So it's a double whammy. So you have muted demand, you have costs going up, P&Ls affected, they're very, stock market driven. So obviously they're conserving costs, and advertising is an expense which you cut in the short term. That's what is happening. To your point on the Zomato the IPO or whatever, the stock markets have been on fire. The stock markets are on fire for a variety of reasons, which are not really connected to reality. So in my mind, that's not a true indicator of what's happening on the ground. That's because more people are coming in, they see short-term gain. There's a variety of reasons for that.
I have another perspective on the same. The high end, which was actually supposed to be reasonably inelastic and should be okay about spending, I think there's an interesting phenomenon happening there. I think their big ticket money is going into experiences, into the entire investments. So they don't put in money then into banks, they put into investments, IPOs and all the other things, and maybe a little bit top end real estate. You hear all these crazy 100, 200, 300 crore kind of houses being bought, albeit by a few, but it's a sign. Similarly, you spend 20,000 rupees for a Diljit Dosanjh concert, but you will not, and there's a whole stampede for getting those kind of tickets. But still, if somebody has to buy a high-end durable, that market is muted. So I think the way people have now prioritized a share of wallet, that's also taken a slight change. at the top end.
And what would you attribute it to?
God, I don't know that. But I don't know, maybe FOMO, maybe just keeping up with the Joneses is the latest hot thing in town. That's why people want to follow that.
Like from what I've gathered, you said TV is under major pressure compared to all other media. But would you say the allocation, which was, let's say, meant for TV, has all plowed back into digital? So disadvantaged TV has been advantaged digital, or has it?
I think TV, I made the point earlier, TV relies heavily on FMCG. 50% of TV comes from FMCG. That, in fact, most large FMCG players are struggling to grow more than 3, 4, 5%. So that's the biggest one. So it's not there. It's not a, and even there is some amount of migration happening to digital. But I think the bigger one is the bigger one is the business. FMCG business is under pressure. And I think even if you look at online sales also they're growing, but the trajectory is sort of plateaued. So overall, it's coming down to the economic sentiment, the overall spends.
So I just to add what you asked and Vikram was kind of explaining. So if you look at consumer trends over years and all, one thing that's definitely coming out, 2 things maybe. One, we are a land of plenty. So what happens with a large population, many varieties, many choices, for us, brand saliency, brand loyalty, everything was very strong. FMCG used to thrive on that. But then my time spent or my wallet is being spent better on experiences where I'm more involved and I'm lesser involved in, let's say, my classical stuff which I used to buy and used to spend more. So e-commerce has actually made things easier, but has actually also resulted into many things which are like creating a bit of lower saliency. And also, if you look at classical FMCG and the classical clients, one of the grouses is that how do I increase brand engagement, brand saliency and brand loyalty? They're really facing a challenge out there because there is a commoditization that's happening. Versus if it's a digit concert, that's one in a while, I'm going to spend all that money in there. So there's a behavioral change that is definitely happening. There is a consumer behavior change that's happening down the line, down strata, which is why we are trying to figure out, and I think many clients are trying to kind of grapple that, do we need to up the game? Do we need to change into something? A lot of premiumization products are doing better, even in FMCGs.
There's another one, it's an interesting one. I was talking very recently to one of a fashion retailer, top fashion retail CEO, and she was telling me that in addition to this low spend sentiment and everything, another big headwind is the fragmentation. What social commerce has gone and done is 5,000 mom and pop stores, boutiques have all opened up, and they are sort of making themselves available through the entire social media led social commerce. So it's actually putting a pressure on the big brands, big stores, and I think that fragmentation is beginning to hit the big guys.
I would assume that because of so much availability and shelf space, your products would have gone faster because my access to it is much faster. But that's not been the case.
I think I can come in over here. I think there is a growth in omni-channel for sure. Across clients, one of the things that they are seeing is that, it's not like e-commerce is a solution for everything. I mean, it will differ from client to client depending on what is exposure to the rural market and to the urban market. But that being said, there is a definitive, at least in a lot of clients that we see, there's a definitive shift of what was historically just like a TV money to, to commerce, to digital, to social commerce, and so on and so forth. So there is a fragmentation from a channel perspective for sure. And now if you look at the way the consumer journeys have changed with their options in terms of whether they want to do quick commerce, whether they do, within commerce there's so much of fragmentation. So one is the consumer journeys are like totally fragmented, so we need to be able to decode that very well. And the other thing is how consumer behaviors are changing, to what Vikram was also indicating. We did a study of Gen Z recently and their attitudes and behaviors, and they are one of the largest consumer cohorts now and will soon be the dominant cohort, right? Their attitudes towards many categories are very, very different. Definitely they are more tilted to experiences than to owning stuff. Their consumption on a lot of these categories is very different from their predecessors. So I think it's not, the world here is moving from what used to be easily decodable earlier. Growth is in pockets. Which pockets these are, you have to find those out. And on one hand, we find that global clients are betting on the country for their growth. On the other side, we've seen a lot of companies fold up their businesses over here and move out of India altogether because they've not been able to decode, and it is very granular, and you need to be good at segmentation and good at your proposition and all of that.
As she rightly said, if you look at it from a comparative standpoint, we'll always be the shining star. But that growth, that chasing that Indian dream, the Indian market, and getting those numbers, has that kind of somewhat subsided?
So there are two parts to this answer. One part is that, finally a lot of the international companies, especially the Americans, firstly they see what's happening in their market, then they go out. If their house is not doing too well, they'll be under pressure. Today the world is in turmoil, so a lot of home bases are under pressure. All over Europe is in a mess, Russia, what's going to happen, China, in any case. So there is a bit of a problem there, Coming to India, I think, so that itself has the problem. But India, the international players are less. If you look at a slice and dice our GDP, the contribute, or even our business, the role of Indian companies, I consider Hindustan Unilever virtually for all practical purposes an Indian company. So the role of Indian companies is far greater. And they'll be affected by our trends, what's happening here. And contrary to some opinion here, our situation is a bit tough.
So, if I had to ask you, given we've established the the inflationary pressures, the global uncertainties, how is that going to impact ad budgets here at home?
If you see, we started by saying that maybe the numbers are going to come down next year, right? So it will impact the ad budgets overall 100%. Means you're going to give it a few more quarters for things to improve. It all depends on the money and the investment that they look at India. And US has to be one of the biggest, call it powerhouse or super powerhouse, which has to keep continuing to look at India as one of their investment countries, which it will. And every conversation that you hear, you see that is one of the big conversations that will happen. So if money will flow in, but what you will continue to see is that you will see the share market boom that we discussed about it. That will keep happening because there are companies which have their own business plans and they're making money for a certain reason. The shareholders' value, their own brand valuation, equity, private equity. So that's one conversation that will happen. But if you look at classical economy, you're going to take some more quarters for it to kind of stabilize. As a country, you will be part of an emerging market. It's called the emerging economy. You will continue to be. Today only they've said that you're going to cross Japan and become the 4th largest economy by the end of this year or maybe next year.
Sorry for interrupting.
Yeah.
Convert to dollars.
That's the problem.
There's nothing.
That is the problem. That is the problem. The moment you convert,
4% you lose every
the moment
year
you convert,
just on currency.
yeah. So it's like you're not comparing apple to apple. So it's a number saying we are the 4th largest, but when you compare the trillion versus our trillion, it's like many hundred in between. But it will keep the country alive. It will keep it going. But you will see a kind of a bit more muted conversation overall.
The question out here is what's the job of marketing is to create demand.
Yeah.
So currently the way the entire marketers are behaving today is they're all doing push selling rather than pull marketing. So all of them are now coming and saying, let's just do performance marketing and all the rest of it. So where it's all about acquisition and acquiring consumers at whatever cost and mostly discounted. You're discounting the brand. So the entire idea of trying to pull people with an idea and just the magic of the brand, I think that's taken a big beating. And to my mind, brave marketers should be actually focusing double time on how to create the allure. Where people are thinking of doing other things, shouldn't you want to just pull them back in?
He's very right. Don't you think that this whole, constant focus on performance marketing and acquisition of customers is also because the marketing department itself has lost its glamour and its general sense of importance within the boardroom?
If we look at performance marketing in a very micro manner, which is like return on investment, how many conversions did you do, how many acquisitions did you do, yes. But a lot of performance marketing is also dependent on what is the idea behind that. What is it that you're communicating and what is the role of content over there? And to that extent, I fully agree that, the role of marketing is to really sort of, pull and excite and set that whole sort of demand rolling with the consumer. And that's definitely, there is a clear role for that.
I think if you look one category, which is in any country, state of the economy of consumption is auto. You see what's happened to auto in this country, yeah? Now, I have the privilege of handling multiple auto clients, and there is mayhem on those boardrooms. You know, so if you go and tell them, listen, you look long term and you look at this and this is the brand pull. Finally, brand pull is designed, very good car coming out. Or you have a situation where they say, well, we need the numbers, we're giving. So Diwali is over, but festival sales are still running. Finally, CFOs have a major role to play. I don't say they run companies, but they have a major role to send the bottom line pressure. So there is pressure, investments are not happening. So I mean, that's a very nice concept and I also believe in it. So fundamentally, I can't argue with them. But to make it happen is next to impossible because
the mindset has changed, you're saying.
Mindset cannot change. The reality is that. I mean, if you won those seats, we would have behaved the same way.
Yeah, the ground reality is different. So I completely agree.
So now that this is your reality, and unfortunately for this industry in particular, next year is also not looking very rosy. What is the conversation within your boardrooms to kind of energize the space?
I think one of the conversations, at least in our group, that we keep having is that we are fortunate to have multiple verticals or disciplines. So for me, it's more like a left pocket and right pocket syndrome. So as long as it is you manage to engage your client, and it is not about media or a creative, or it's about how are you going to give him a solution or her a solution which will kind of make that brand pull or brand engage better. It can be anything from a creative or a media, because you know that the pie is going to reduce. It's very clear. And that pie that will come to us will come in a much lesser form. You need to now figure out how to get a larger share from that pie versus various other things. So the board conversations have changed from just trying to figure out a plan or an idea. It's also about experience, like we were discussing. It's about many other forms of conversations which probably the client has no clue of, which is happening in most places, most countries also. You call it consumer experience, you call it UX, you can call it anything. But it's about getting the consumer and trying to understand, how do I get him? What do I do? It can be in any form of media. The number is going to be smaller. So let's face that your number is smaller, but you have to continue doing your job best.
So your projections to your headquarters are
it's
shrunk?
definitely far more, I would say it's far more practical. So I've been very practical with the fact that there is a genuine slowdown. It's not like we are kind of crash landed or something, but it's not that rosy numbers that you guys were seeing a year or two back. Let's be practical about it and let's see it quarter to quarter. So it's not conservative. It's still growth.
So in our case, I think we are trying to, stay focused on the client's needs. End of the day, we are saying what is their marketing problem right now? What is the outcome that they're really seeking? And let's see what we can do to enable that. In some cases, we find that it's a trial penetration story. I'll say something which is obvious but not so obvious. People are still going to UP and doing only TV only plans. TV penetration in UP, TV penetration is 50%, and maybe it is going to be less than 50% next time we see it. Digital penetration is 65%, YouTube and all the rest of it. Somewhere along the line, you have to have a combination to reach, and there's so much reach you're leaving on the table. But people are doing it now. Why are they doing it? It's crazy, right? But people are doing it, leaving it. So some of those answers are like quite straight in your face. You just have to find them, understand consumer, understand market, understand brand, and then find the answer. The other is using technologies. So there's some green shoots coming out which are frankly exciting me. Earlier we used to do all this, have a target audience, and we say that this target audience males 15 to 45 or whatever is going to buy a thing, so you target those guys. Now in digital it means you're targeting them and only them. TV at least used to have spill.
Exactly.
But here it's now what digital technology is doing is do broad targeting. Now just mass broadcast and look for signals. Maybe you can mine those and then do something with AI.
So what happened to the most favorite jargon of let's say 2024, personalized targeting at mass? Scale. So you're saying the contra, just mass target and see what happens.
Maybe that can work somewhere, but I think consumers are more similar than they're dissimilar.
Yeah, absolutely.
So I think mass targeting makes more sense in general. If you have to say it in a different language, of course you must say it in a different language or in a dialect which actually appeals to them. Of course, that's but the message would be probably similar, right?
No, it's actually contra. You're very right, because this personalized targeting at scale sounds very fancy, but it kind of leaves out. It doesn't spill anywhere, so it's too on the spot. like hitting only one person?
No, I think the best in recent years that we saw was that Cadbury is not just another Cadbury ad. That was really clever because they really were picking up the small retailers and making heroes out of them and actually doing a very good job. So I think in that point in time, customization helped. But for the sake of it, probably doesn't.
Question for you, Shashi, but all the panelists can ask him as well. So big news with, the Omnicom IPG merger. It's finally happening. It's going to put the entire pecking order in a bit of a tizzy. A lot of people are getting quite insecure. There are other holding companies sitting here. What was the reason for this merger?
I think it's about scale, and as I've read, I mean, this is all my decoding of what has been said to me or what I've read, is that there will be savings made, about $1 billion savings or whatever it is, to invest back into tech. And, and that I think is a great thought, that if you can invest back in automation tech and take on the big boys, because my perception is, and they are more competent than me, but my understanding is in US, it's not about share between the networks, it's about what the tech companies are doing. So they are eating our probably bread, butter, cake, whatever. And that in a way is happening here also, in a small way, not a big way. So I think this is more this is my reading from a distance. I may be wrong, sitting far away, thousands of miles away, but that's my reading, is what being done there. India is different. India is still, there is the big boy in play and they are big, so there's no, so this is I think it's a good thing. I mean, to answer your question, I think your question to Vikram was more about our own companies, how we're going to react. And he very nicely converted it into what he'll do with clients and targeting and all. I think the one big challenge will happen, which we, at least I speak for myself, as all Indians are, all Indian leaders, we were easy post-COVID. We were very comfortable. We didn't rationalize too much. But I think the pressure on automation is going to be very high now. Our processes, our planning tools and everything is going to be automated. We're already seeing it happening. And that process will lead to people finding jobs for themselves which are more, which is after their competencies. And so people will have to upgrade their capabilities and competencies. I think the big churn, as I speak from, I don't know if Anup agrees with me, 2025, for our own organization is going to be a reorientation of what I'm doing, because a lot of people, there's so much grudge work in our business, and that grudge work, people are happy doing the grudge work. There's so much amount of meat in that, and the high was from that I worked 15 hours doing this, fine-tuning this plan. But as automation comes in, then you'll have to reorient yourself. So I think this 2025 may end up being, in my mind, what COVID didn't do, 2025 may do.
But just to come back to the Omnicom question, once you guys merge, right, and you're one entity, that obviously makes you the giant compared
Globally,
to
yes.
everybody
Globally,
else,
yes.
globally, and even in India.
Yeah.
If you merge operations, do you think that will take a toll on WPP, which is, at least in India, being the big dada?
See, I think the trick is not about size. In my mind, and I say it with sincerity, I mean, I've always said that, even when Ashish started the number 2 thing, I used to say it then, I say it now. It's not about scale or size. It's about what you do with that efficiency. What investments you make, what do we do. I see us doing a lot of stuff there. I see a lot of opportunity. If the opportunity is seized, well and good. So it's not becoming number 1 or number 2 or whatever. Frankly, that to clients doesn't matter. What do you bring to the table? And I mean, we have won many businesses, we have lost many businesses. So to bigger, smaller companies, it doesn't matter. I think if you can create a story, to his point, on tech, on data, whatever, and that if you can seize the opportunity, it'll be very good. If you don't, it'll be a loss.
Anupriya?
So for 2025, definitely there are headwinds globally as well. Everybody has spoken about the headwinds over here.
Except you.
Except me. I've taken that into cognizance. I'll roll it in my global plans. That being said, we are pretty optimistic. Overall, it is a market that is growing. That itself a reason to celebrate. As compared to there is a lot of doom and gloom.
You are really an optimist.
Yes, exactly. So one is that. So always celebrate what you have. One is that. That being said, growth is not going to be easy, as we discussed, and we can underline that all over again. It is not going to be easy. It is going to be in pockets. You need to be close to the consumer. You need to be close to the clients.
Are you pushing back in terms of pushing back headquarters, saying revise my targets and it should be more muted and margins are getting eroded?
No, in our case, it is a conversation. And they are pretty close to the market as well. Like, we work pretty closely. So I think we are fully in sync. And they understand how the overall, geopolitical this thing is impacting the economy globally, including in India. I must also here say that quite a few of our clients, their global headquarters have a lot of expectation on growth from them. As part of that, clearly they are also going to be increasing their ad expenditures. However, the expectation of growth is way higher than the increase in the ADEX, which means that there's a lot of work for us to do. So that is one part. And the good thing is, like Rana also said, that we have a good presence across sectors. So that way it's a little balance for us, like there's a good presence on FMCG, foods and beverages, and then there's auto, there's BFSI, there's pharma, and so on and so forth. So that's helpful. The other is the full funnel sort of presence. So across our various services, we have a good presence on that, and some of this transition we've done. We have capabilities on a lot of things which are equal to commerce and content and personalization at scale and all that. So in the last actually couple of years, we've seen that. So while some parts of the services are irrespective of the ADEX, so ADEX is not a great, is not an accurate sort of signal in terms of what growth to expect, because as we see that the digital economy is increasing faster, that we can, nobody can sort of, So as the digital economy is growing, the whole work arena, as it converts into advertising and marketing, there's lots more to do in that space, including creating outstanding consumer experiences and all of that. So that's an area of growth as well. So that's also unlocking growth for us. And so as we move into 2025, we will look at sectoral sort of split. We will look at ensuring that we are part of all funnels and the funnels which are growing especially. And of course, continue to reskill our people and upskill our people so that's on 2025.
Your view on the Omnicom IPG merger, before I go into the GeoStar analysis, your view on that merger and what it will do globally and also in India? Will it change things dramatically?
Yeah, I think it will make a difference. They've got, between them, they've got some great data and tech assets, and I think it can make I think Publicis had taken a march amongst all the global networks on the entire data tech space. I think Publicis is going to get a run for its money now.
Okay.
WPP is way behind. With a tinge of regret, I say that. I was there for a long time.
Rana, your view on this merger?
I think it's exciting times. For me, it's always been that when and this is the order of the day everywhere. If you look across categories and across things,
are we going to see more such marriages?
Maybe after a few more years, because consolidation will keep happening. There are many rumors that have already started floating.
Give us some.
I don't know. I just know that we got listed in the Amsterdam Exchange, which is good news for us. So we know that it's a completely different track we've taken. We divested the whole group from Vivendi into 3 parts, and we won into 3 different countries. The listings just happened. We came out of a call. So naturally, it's a different conversation from network to network and global plans and all. But I think it's good for everybody, because too much fragmentation in our entire industry is also not good.
This merger, come on, be candid. This merger, what will be the impact on WPP?
On WPP?
In particular?
I don't think, because whatever we are seeing in terms of size and scale, I would also think that it's like Sashi said beautifully, it's about what you finally bring on the table, because I think if you see the flip side, I would say that if I look at from a consolidation and a way, I think WPP started the exercise few years back. So in a way, they've kind of moved somewhere else and they're trying to figure out what's happening. If you're only looking at size, then it's a different conversation. But I think their journey will take a bit of time to stabilize operations. Because
are you talking India?
India too.
But what I'm trying to hint at is that they started the journey internally a bit back in a way.
This is a totally different scale of
Yeah, but
marriage.
what Anu was saying is right. When you are facing so much of challenges globally and all, when you're going to do something like this, it's going to take at least 12, 18 months to settle down.
Sure.
So which basically means you're going to hear more stories from their group than from the other groups, who are probably be following their own track and looking at what we need to do, look after the countries, look at what you're doing best. But I think their task would be a bit more different from us. So I don't think WPP is impacted at all. They might be saying whatever they're saying. I think for everybody it's just work as usual. I think a greater work and greater focus and a lot of work probably will go with Sashi and the entire team in India also.
So irrespective of the merger, I think the one thing which and Vikram and Anupriya alluded to it, the one thing which I genuinely believe it will not be about scale. The future of our business is not about scale. It's about the investment and the capability you bring to the ground on data and tech. And that is a leveler. So whether we are now become the number 1 in the world or WPP is in India, it doesn't matter. It's what we bring to the table, and that's what, so that's going to be critical.
No, but I feel, I mean, nobody's saying it, but I feel in India, with Omnicom and IPG is anyway a well-entrenched player. Omnicom has been getting serious in India for a bit now, but of course not as entrenched as, let's say, an IPG or a Publicity or a WPP. My point is, with both of your capabilities coming together, and there's a decent repertoire both in the creative and the media side, it is definitely a big challenger to WPP, which has been the big bully of the market.
I don't know, when we go to a client, the client says, what do you bring to the table? He doesn't look at, so I think...
I think it's more from our perspective and all, because sometimes when you go in for conversations, it's sometimes very fair on the ground. It does play a role, but I think it's what you're taking forward. That's what happens. I think so while yes, size mattered maybe some years back, but I think the reason why we are mentioning Publicis because they've naturally moved their game so ahead in tech and the other aspects of consumer journeys. That's where a lot of us are catching up, or at least are playing the conversation to catch up.
Just going into one little space, and you talked about OTT and you're seeing this whole connected TV growth. Is that palpable in when you look at the ADEX and seeing how much of that kind of is being allocated to connected TV? I'm asking because of the OTT growth has been suspect for a while now. People are not willing to pay.
Well said.
No, so firstly, CTV doesn't only mean OTT, it also means YouTube.
Okay.
No, seriously.
Yeah.
The biggest spends in CTV are going to YouTube. So
OTT is nowhere in the...
No, OTT is also there, but I'm not saying that CTV should be equated to OTT. So at the moment, it's more talk around CTV, and a fair amount of attention towards CTV, but the monies there are not as high as the talk. But I think it's a sign of things to come. Look, numbers are not very good. Some of us say that about 30 to 40 million homes out of the 200 plus are right now in CTV. I had another guy telling me it's 80 million. Now I don't know where homes. If you go to YouTube, they say 80 million individuals. So, the numbers are all over the place, but it's probably 40 million homes is 35 to 40 is what we're talking. Now, if that keeps on growing, you're going to be having a situation where sooner rather than later, cable, DTH and CTV will probably be about the same size. Then it becomes a big thing.
I have a totally contrary point. But
Sure.
We sit together. So I think, I'm sorry for Vikram.
Not at all.
So I'll tell you, I think, and I keep saying this publicly, we are to blame. When I say we, BARC is to blame. So the growth of CTV is primarily because the growth of, forget CTV for the timing. CTV is a means to an end. So you watch CTV is what you're watching on the big screen, whether the input signal is coming from wherever it's coming from. So forget CTV. CTV is just a mechanics for distribution. Content, why have we allowed content, premium content to go through? Because the way what he and me are part of BARC is run is, it's a lowest common denominator system. We are not measuring premium homes, top-end homes. None of us in this room and many others can get into the home because the way it's measured. You don't measure, you don't see what we are watching. So intuitively you say, listen, I watch Netflix or I watch whatever it is, that's it. We are moving in the direction, thanks to Vikram, we are going to measure premium homes. What we are defining as premium homes.
Really?
Yeah.
The chairman speaks.
We are getting passionate about it, That's going to be
He's
the
been driving it for a long
last
time.
thing we will do. And
just
some
playing
people are
the
resisting, but I will ensure that goes through. So hopefully by May, June, when you start getting premium content, when you start measuring, then people will start monetizing that content. Now, whether the content is on the digital form, which is CTV, or it's on HD, it doesn't matter. So I'm hopeful it'll be this whole CTV versus HD will be a neutral thing. It will finally be what content is watched.
And what is your view on the Jio Hotstar merger?
Start from there.
No, he's the one who said it's a good idea.
What's going to happen? How is it going to impact the market dynamic?
I think it's very good because just like I said for IPG Omnicom, the investment in data and tech, and there's a huge amount of investment to be made. This cannot be sustained, So unlike TV, there's here investment in data and tech and content both. So I believe that, if you consolidate, you will have the wherewithal to rationalize and you go with it. So I think in the short run, it's a damn good thing. But you need many such players. You need 2, 3, 4 such large players.
How is it going to happen?
Why not? It can be, one almost happened, it came unstuck, Sony and Z, almost got, so I think there's a possibility. The government itself is doing some stuff. I was part of a team where, I don't know how many of you heard of something called direct to mobile. It's a game changer. If it happens, it's like, it's revolutionary. I was called in one day and I was floored. So it's like basically what they're going to do, put content through, and they're testing in 19 cities, put content through the BSNL signal or the Doordarshan cable they're putting. So they're doing any cable connection. They don't need any fiber or nothing. So if the government pulls it off, they're creating another platform there. So they'll be competitors. So there will be competition. So I think it's a great thing. Investment will be made, whether the government does it, whether...
What I'm welcoming about this is, on the digital side, it could provide a viable alternative or competition to the big tech. And I think while Google and Meta and Amazon, they do great, their technology is fantastic, they're coming out with great products and all the rest of it. The discomfort that I have is that they control the narrative. So right through in media as an agency, we bring objectivity into the picture. We try to bring some accountability into the picture. Now, you have the way the narrative has been run with big tech is, this is the way it's done. This is our data is unimpeachable, pay by our data, and so on and so forth. And yeah, you can try challenge lovely people out there, but they, in their own way, actually drive the narrative. I think if you have competition to that, I think it'll be healthy for the entire market.
But then in all of this, what is the fate of TV?
Look, as long as there's, to me, as long as people are watching linear TV, it has a great future, just like print. Like print also, you continue. As I don't know how many. I'm supposed to now get the IRS on underground very, very soon. At which point in time, last time we were there were close to about 350 million Indians who were reading it. Let's see how many are there right now. Fact is that still print is still growing because it has a role to play. People see the effect of print when they when they take a newspaper ad. So any medium which has a consumer sort of following will have a reason to be, including TV, for a foreseeable future. So if tomorrow out of the 200 million, large part, 90% go into connected TVs or what have you, and nobody is watching linear TV anymore, then there's a problem. But I don't see that happening in a hurry.
Despite the fact that we've had such a bad year in 2024.
I'm talking about per se TV, there will be a demand for TV. Now, I'm not saying whether the prices will go up or not. I'm saying but money will go into TV.
Money will go. So it is still...
So there may be, currently things are very fragmented. Look, if you think things are fragmented on TV, they are fragmented 10 times over on digital, right?
Yeah, for sure. Yeah.
And there trying to use technology to try to sort of match, to fight the fragmentation by having frequency, capping and Google has a lovely product called targeted frequency. So they try to beat the fragmentation there. But end of day, it's a notion, it's a black hole.
Sure. Before I let you guys go, I want each of you to give some pearls of wisdom to clients and your view of how we performed creatively as an industry. Since none of you are creative people,
So I think, there are 2 points I would like to say. I think for me, for every client and everybody, I think 2025 is an inflection year. So it's going to change a lot of things. It can be in forms of the way we engage with clients. It's the way we engage with consumers. It's the way we engage and embrace technology or any form of tech, whether it's AI or everything. So I'm seeing 2025 as a completely year which is going to change conversations definitely for the Indian industry. So it's happened globally. We are going to change a lot of ways we are working, the way we are engaging with many tools and formats and all. I'm not talking about just pure networks and all. I'm talking about the approach to advertising, media, communication, creativity. And linked to that, clients need to become smarter. And we will naturally look at from one quarter to the other quarter. But I think it's time to start understanding that if you want some form of brand engagement and brand loyalty and brand conversation, you have to invest time with brands and not just look at it just like another commodity, which is something which is definitely happening. And I'm not going to shy away from that fact. And that's the conversation we have with most of our clients. So if you look at some of the brands, and I'll bring it back to you, that's the same conversation. The conversation where things are moving better is where experiences are happening. The conversation where things are moving better is where there's a bit more money and a bit more investment is happening. That's just not the way it should approach. A brand should be seen in isolation, whether it's for down the market penetration or whether it's high end. So So I think it's time for clients to understand there is a change happening overall. It's not going to be an easy year. Maybe pull back and spend some more time on building few brands again for brand loyalty.
And what about your comment on the creativity this year in 2024?
In terms of how did we
How
perform?
we
I think we were okay. We were not exceptional. I think, because like I keep saying, you're facing the same kind of conversation point that everybody is challenging, that if you have to just ensure that whatever you create is about selling, then actually you're not looking at the quality of work. So if you tell me what kind of advertising did stand out or creativity stand out, I think I would give a rating of around 5.5 or 6 out of 10, nothing more. And hopefully next year would be a better year in terms of work.
Vikram?
30 years back, an advertising presentation was 95% creative and last 3 slides were media. Now the damn deck is media and advertising as the creative has gone out of the window. I think somewhere should come back.
Sure.
And I'm a media guy talking.
Yeah.
No, I think absolutely. So I think if you ask me, this whole, like I said earlier, at least I speak for ourselves, there will be focus on data and tech definitely. But the flip side, as Vikram called out, the minute you focus on that, every client and all of us included start looking at 6 seconders, 3 seconders, 4 seconders, and I think creativity has suffered. And finally, consumers react to what they see. The medium is not the message, in my opinion. It is finally the message which is important.
That's your message to your clients. And what about your rating of the creativity?
That's what I'm saying. So really, it is suffered.
For 2024?
It's suffered. So at the macro level, there's so much on digital, there's so much on those. And look at the environment. The environment has changed. All the influencers are doing fancy stuff. Social media is doing. So the relative, the stock has gone up and we have come down. So I think advertising needs to pull its stocks up.
Well, I would say that I will underline whatever I said so far. So my message would be that growth will be there, but it's going to be tough. So for all clients, they need to be very close to their business and consumer. And for us, we need to be very close to our clients and their consumers. And in terms of creativity, I think we had an excellent year. And on 2 parts. One, of course, is this whole, platforms and global platforms where you sort of, and I think Lumanet was one of the most awarded shops at Cannes and all the other platforms collectively. So that was great. That being said, we, as our global CEO also says, we don't believe in creativity for the sake of just winning awards. Creativity is what moves business. And to that, I think I fully agree with what Vikram had earlier said. It might not be easy to do, but I think the role of creativity in moving business is extremely critical when everything like data and pricing and technology and everything is an equalizer. It is the creativity really which makes you move. So I think that will continue.
Well, on that note, thank you so much, ladies and gentlemen.
Thank you.
That was quite interesting, and thank you for being so candid about the year that's just gone by and the year, of course, that we're embracing. Hopefully, this has been as enlightening for you as it has for me. On that note, from all of us here, wishing you a happy new year.